So was somebody deliberately trying to smack down the silver price, or did they just think it was too high? And obviously it was relatively high on that day, and they were just trying to take advantage of the high price. But, there's two possibilities. One, they were going short, which is going to basically force them to buy back now, or they were selling a large position. But I can't see anybody wanting to sell a large position because all the fundamentals are in favor of it going up, with falling supply and rising demand from the electronics industry. And there's every year for the last 3 or 4 years an annual deficit. So I can't really see that a big silver holder would particularly want to sell at this point unless they have to raise cash for another problem. There's no problems going on at the world. I mean, no problems like margin calls going on anywhere at the moment. So people aren't being forced into raising cash. So I don't think it was somebody being forced to sell. I think it was probably somebody trying to take a short position, as is written in that post.
Canadian journalist Clive Thompson has tracked silver's distinctive price patterns, noting cycles of stability followed by sudden leaps. Thompson observed silver recently stabilized around $30 to $32 before jumping to $33, sparking bullish sentiment. It then climbed past $35, fueling expectations of a move toward $38 to $39, with Thompson recalling it briefly touched $38 last week, reflecting sharp spikes followed by consolidation. The silver market experienced its most dramatic move on Friday, when prices leaped through $37 and then $38 per troy ounce to reach new 14-year highs. This surge was directly attributed to U.S. President Trump's shock trade tariff on industrial metal copper, which created what market participants described as a scramble to import silver into the world's largest economy. Thompson's analysis reveals that silver has demonstrated remarkable consistency in its price movement patterns, with the metal establishing periods of relative stability before experiencing sudden upward movements of $1 to $2, then settling into new, higher trading ranges. This pattern has been particularly pronounced in the broader context of silver's extraordinary multi-year bull run, with the precious metal surging from around $9 to over $48 per ounce in under 3 years, driven by massive global monetary stimulus and growing fears of currency debasement, which sparked strong investment demand. The silver market has entered its 5th consecutive year of supply deficits in 2025, creating a fundamental foundation for higher prices. The deficit stems from inelastic mining production and rapidly growing industrial demand, with industrial consumption proving more consistent than investment demand. Before we dive in, make sure to like, share, and subscribe to our channel. Stay connected by hitting the subscribe button and turning on the notification bell. You won't want to miss any of our latest updates.
We've been seeing for the last year or so these sort of still is stable for a while, then suddenly it leaps up a dollar or two and then comes back and then it's stable, and then you think, well, I thought it was the rally starting, and then it's stable still, then it leaps up again unexpectedly. So it's almost like it's testing the market to say, hey guys, what do you think of this? I'll jump up and see what you think. And then of course what seems to happen almost every time it leaps up, there seems to be a wave of sellers, which and then the price stabilizes at a certain level. More recently it was stabilized around $32, and then leapt up to 33, and everyone said, hey, 33, we're going to the moon. And it sort of stabilized there, and then it went up to above 35, and everyone said, well, 35, it's going to 38, 39, and then stabilized, and now we've just got above. I saw it one day, didn't we hit last week at one point, for a few seconds anyway, at least $38. So was somebody deliberately trying to smack down the silver price, or did they just think it was too high? And obviously it was relatively high on that day, and they were just trying to take advantage of the high price. But if, there's two possibilities. One, they were going short, which is going to basically force them to buy back now, or they were selling a large position. But I can't see anybody wanting to sell a large position because all the fundamentals are in favor of it going up, with falling supply and rising demand from the electronics industry. And there's every year for the last 3 or 4 years an annual deficit. So I can't really see that a big silver holder would particularly want to sell at this point unless they have to raise cash for another problem. There's no problems going on at the world. I mean, no problems like margin calls going on anywhere at the moment. So people aren't being forced into raising cash. So I don't think it was somebody being forced to sell. I think it was probably somebody trying to take a short position, as is written in that post.
Yeah.
I think what happened on Thursday, that if that was a person trying to take advantage of the market, what he probably assumed was that because silver had been rising, a lot of people had jumped on the bandwagon, had become silver bulls, and had placed stop losses slightly below the market. So he probably expected by a massive dump of silver onto the market, he'd drive the price down, triggering all the stop losses, forcing all the longs to liquidate their positions. They would be liquidated automatically because of the stop losses, and he'd be then picking up the silver at the bottom of the market at a much lower price. That's what he obviously hoped, but it doesn't
Yeah.
seem to have worked for him. Well, nothing ever moves in a straight line. So bull markets are always punctuated by these bear moments when things go down for a week or a month or several months. But clearly, at the moment, the amount of wealth being created by the government's borrowing and getting poorer it's off the radar screen in terms of percentages, and that wealth is turning up in the hands of people who can't spend it on other things. So what do? They invest it. Now that what does that mean? It means that the fundamentals of the stock market don't actually have to be very good. They can be quite poorly, but there's still going to be money pouring into either the stock market or property or gold or silver or Bitcoin or whatever you like. The wealth which is created has to find a home, and I
Yeah.
don't think it's going to be treasury bonds. According to the FedWatch, the CME Pet FedWatch, there's almost no possibility of a cut at the Fed meeting at the end of July, 30th of July. They've got like 90 something percent saying the rate will hold steady, and then the probability of a cut does shift for the 17th of September meeting to 57%.
Yeah. Yeah.
And
So
then it's only a 0.25% cut. So it looks like if the market's right, if the CME Fed Watch is right, it looks like there'll be no cut in the summer at all. Yeah,
so
so M2 is going up sharply here, which means that that is definitely going to be inflationary. But obviously what it's doing is, amongst other things, it's boosting asset prices.
Thompson notes that one key development catching his attention is the apparent weakening of the US dollar. For holders of dollar-denominated assets like US Treasuries, this presents a double loss. Not only are bond prices declining, but the falling exchange rate, already down around 13%, is compounding those losses. The US dollar index fell more than 11% in the first 6 months of the year to 97, marking its worst first-half performance since 1973. The index dropped 7% since U.S. President Donald Trump announced sweeping reciprocal tariffs on April 2nd. The fragmentation of global trade and geopolitical turmoil are prompting central banks and investors to move away from the U.S. dollar and opt for alternatives such as gold, the euro, and the Chinese yuan. Since the start of the year, the dollar has declined more than 12% against the euro, led by Trump's policies that have narrowed the U.S. trade deficit but raised concerns over rising borrowing costs. This dollar weakness has created a favorable environment for precious metals like silver, as investors seek alternatives to dollar-denominated assets. Research indicates that undervalued local currency bonds and foreign exchange markets in Turkey, Chile, and Egypt remain attractive, with demand potentially rising further if the dollar continues to weaken. Current market dynamics suggest silver's breakout to 14-year highs may represent a new phase rather than a temporary spike. Let's get back to the interview.
The one thing which stands out to me is that the dollar does seem to be weakening. So if you're a holder of dollar assets like US Treasuries, not only are you losing because the price is going down, you're losing because the exchange rate has fallen already by about 13%. And I know that because just as an experiment, and not because I like it, I bought a fund called LQD. It's an ETF which follows investment grade bonds. And I looked at it, and the price is more or less what I paid for it. But my bank says I'm losing 13%. I thought, well, I'm losing 13%. It's more or less what I paid for it. The reason I'm losing money is the fall in the exchange rate, i.e. the dollar has collapsed.
yeah.
And so I think that's, there's going to be an awful lot of people all around the world who will be talking to their investment managers saying, you bought me these bond funds 2 years ago. Why are they all showing losses?
Yeah.
What are we going to do about it? Especially Germany. I think they've allocated another $500 billion to the military budget, which is a huge amount. And clearly Europe is saying we can't rely on America to be our ally necessarily. I mean, one still likes to think they would be, but if the worst comes to the worst, Europe is saying we've got to make a little bit more effort on our own. So that will obviously widen the budget deficits and means the governments have to borrow more. And if they borrow more, government gets poorer, someone else gets the money, someone else gets richer, they reinvest it in other assets like gold, silver, stock market, property, whatever you like. Well, if Jerome Powell is replaced or if he decides to resign voluntarily, the assumption is that the president will put in place somebody who's going to be very much in favor of lowering interest rates rapidly. Now, that person probably cannot act single-handedly, but he certainly will have an influence on the rest of the board. And, one of the lessons of history is it never makes sense to oppose those in power. The Lombards tried it and it was off with their heads. So I don't know about Trump, but and what's going to happen with Powell. But reading between the lines, basically, we're hearing that if there's no call, if Powell does not resign, Mr. Trump will find a reason to fire him by accusing him of some wrongdoing related to the renovations of the Federal Reserve buildings. Now, you may remember, if we go back right to when we first started talking, and the Federal Reserve was making huge profits, and I said, it's gravy all round. They're making these billions of profit every week, and of course, they're paying the surplus to the Treasury. But when you're making billions, it's Dolly Bird's secretaries, holidays, lunch canteens, new computers, new office chairs, luxury desks. And of course, we're now hearing that was what was actually happening. Was it right? Was it wrong? I'm not judging that. I'm just saying it's bound to happen. When you're making a ton of money, you're going to spend some of it. And that's obviously what the Federal Reserve has done. And now Trump is saying that was perhaps a bit over the top. And maybe we have cause to fire Jerome Powell. So what would I do if I was Jerome Powell? I'd be quite worried. I think I'd be quite worried. Now, obviously, he might say, I'm sticking it out to the end. I can't be fired, and let's see what he does. But I wouldn't be that sort of person. I think I'd probably say, okay, the present leader doesn't like me. I can do better things with my life. I can live without being criticized like this. I'll just move on. So I think if I was Jerome Powell, I'd resign. But he has up until now said that he's not intending to do anything and he's going to sit out his term. But people do change their minds. And the pressure has been upped very, very significantly in the last week or two. So it could be that he's gone. Now, if he's gone, what does that mean? It means the successor is going to be a loose money person, in almost certainly, and the market will see it that way. And that will mean the melt up in which we're in the middle of a melt up. I mean, this is actually happening before our eyes. Almost all asset classes are rising to all-time peaks. That melt up is going to just continue and probably accelerate.
According to FX Empire data, the silver market broke higher during Friday's trading session, showing strong upward momentum. Technical traders are closely monitoring this move, using the current consolidation zone as a reference point. If the momentum continues, silver could be on track to test the $40 level, following typical technical breakout patterns. Silver and gold are increasingly reflecting the shifting dynamics of the global financial landscape. With growing concerns over currency weakness, declining bond values, and rising industrial demand, both metals are regaining their status as reliable stores of value. Do you think silver is setting up for a breakout above $40? Share your thoughts in the comments below. If you enjoyed this video, don't forget to like, share, and subscribe. Only 4.5% have subscribed. So hit the bell icon and turn on notifications to stay updated. Your support helps us continue delivering the latest market insights to you and the entire community.